The Dow Jones plunged as much as 2,700 points this morning before the market even opened. And then after the market opened, just seconds after the bell, everything was halted. Trading stopped. You couldn't do anything. You couldn't sell. You couldn't buy. All of it was stopped, which means there's more widespread panic. And you might have thought, maybe I should look at my 401k. Is it time to sell? I'm starting to panic a little bit. Well, I have some things you may want to consider before you decide to take that plunge and sell all of your 401k retirement money. Coming up. Yes, so the stock market roller coaster continues to wage on, guys. It went up 2,000 points on Friday. It went down as low as 2,700 points today, as we're talking about the Dow Jones. And there's been a lot of crazy panic going on, right? And so you might be asking yourself, what do I do with my retirement money? I don't want to lose it all. Well, before you take any rational steps, I want to bring some things to light for you that you may want to consider before pushing that sell button. But first, I want to welcome you to my channel. Hi, my name is Brad, and this is Own the Chaos. The stock market is a crazy and chaotic place, right? No more evident than it is right now. But I made it my mission to help you own it. So if you want to see more content such as this, I would encourage you to subscribe to this channel, hit that notification bell, and if you like today's video, I certainly would appreciate that good old thumbs up. Okay, so just to give you perspective as to what's going on in the stock market today, as if you weren't worried enough, Tesla came down from $968 highs in 2020, and then as I speak right now is being traded around $478. So that is a drop of almost 50%. Unbelievable move for Tesla. Apple opened up at $241 today, which from its 52-week highs was down from $327, which was also in 2020 so far. You can always put your money in Boeing and feel somewhat good about it, right? Well, again, Boeing has dropped nearly 70% from its 2020 highs and is trading currently at a mere $139 per share at this point. Domestic box office sales are down 44% from just last weekend, which has helped to bring Disney down from $153 a share all the way down to as low as $90. The CDC is now stating that gatherings of 50 or more people should be canceled or postponed for at least the next 8 weeks. Schools are closing, businesses are closing, restaurants are closing, bars, you can't go anywhere, right? And the big R word, or recession, is being thrown around even more every single day, which kind of blows my mind a little bit, because if we can't go to sporting events and we can't go to shows or we can't go watch a movie, yet hundreds of you will go out and buy up all the toilet paper that you can. Well, in my opinion, you're buying the wrong thing. Stop buying toilet paper and start buying stocks, people. The prices in which these stocks are at right now is a joke. A legitimate joke. When you see something like Apple fall from $327 all the way down to $241, and Tesla loses half of its value, look, I know that things seem as if you should be in panic mode right now. The coronavirus has spread quite a bit, and so everybody is on edge. Italy seems to have been hit the hardest with this at this point in time. But what I would like to encourage you guys to do is just take a step back and think about where the economy was before the coronavirus hit. You know, a lot of people are talking about how this compares to the 2008 crisis, and in 2008 the economy was not doing well at all. So the reason that the stock market crashed was because people were losing their homes. They were foreclosing on houses that they couldn't afford in the first place. That was a fundamental core issue as to why the crash happened in 2008. The crash is happening now in 2020, not because of a fundamental issue such as that, but because of, everything shutting down. Businesses are closing down temporarily. On the bright side of this, because the economy was doing so well, a lot of these businesses have cash. They have money to be able to, support themselves through this event, through this issue that we are experiencing with coronavirus. And so the economy was much more set up for a crisis such as this than they were back in 2008, which leads me to the issue of your 401k and what you should be doing with it now. Well, as I said earlier, stop buying toilet paper and start buying stocks, guys. Look, increase your contributions. Yes, the stock market could continue to come down, and I actually think that it probably will. I don't think the bottom is quite in just yet, but selling out of your 401k will be a very bad idea, and I can almost guarantee you that you will regret that decision if you choose to do so. Before we talk about what you will be missing out on if you sell your 401k, right now as you're seeing it continue to come down, which, guys, I know it's extremely painful to watch. But what you need to understand is that 401ks are meant for the long term. So if you're in your 30s, your 40s, or even 50s at this point, and you're worried about your retirement, you still have time for this to recover. And in my opinion, I think it'll recover much faster than it did in 2008. And if you don't believe how fast that this could potentially recover, I want to bring you on over to the S&P 500 chart. And for all intents and purposes, I'm using the SPY here. You can see this is the Spider S&P 500 ETF, which is SPY. And you're looking here and you see that back in 2008, this came all the way down as low as $69. And that was the bottom of the 2008 crisis. Shortly after that, this continued to rise up quite quickly. And if you guys recall, I was telling you about how terrible the economy was back then from a fundamental standpoint, with people losing homes, foreclosure after foreclosure every single day. And this recovered quite quickly. In just 2 years' time, this went from $68 all the way up to $122, nearly doubling in 2 years. From there, in April of 2010 to March of 2013, it went from $122 all the way up to $158. And the S&P nearly tripled by 2015, meaning that if you had sold all the way down here in 2008 because you were fearful of your retirement, you could have missed out on 3 times the amount and nearly twice the amount from where it was before the crash up here in 2018. So if you would have sold your 401k in 2008 out of fear because you thought maybe, I don't know, your 401k was going to go down to $0, which it won't, you could have missed out on quadrupling your retirement account over a 12-year span. So like I said, if you're in your 30s, your 40s, even 50s, and you're waiting and you still at least have 10 years or so, or even 5 years till you retire, you got time. So at this point in time, you should be looking at this as a really good opportunity for your retirement and increasing those contributions. If it were me, I would be maximizing my contributions as much as I can. Obviously, I don't want anybody starving or not being able to eat because they're contributing too much to their 401ks, but I think this is a great opportunity that if there's anything that you have within your budget to be able to add or to your contributions or increase them as much as you can, now is the time to do it. Because if history ends up repeating itself, you could very well more than quadruple your 401k retirement plan within the next 10 years. I think that we see a massive correction from this drop off sooner rather than later. And I think that the recovery period for this sell-off is going to be much faster than what happened in 2008. Not only are you missing out on potential gains for the market to recover as you're adding into your 401k, but there's also significant penalties that revolve around selling out of your 401k before you're 59 and a half years of age. Not only is your employer going to withhold 20% of whatever you take out of your 401k for taxes, for regular income tax, but you're also going to get tacked on an additional 10% penalty tax from the IRS for taking out of your 401k early. That means you're going to get taxed potentially up to 30% in penalties and fees because you're taking out your 401k early, on top of the fact that you've suffered a significant loss. So it really just makes no sense, especially if you're not planning on retiring anytime soon, that to take out your 401k, because it just makes no sense. Give it some time. You're looking at the short term if you're worried about it right now, and not the long term, and looking at the potential gold mine that you're sitting on for the opportunity to be able to add to your 401k and really kind of maximize that retirement plan for the future. Imagine what this might look like 10, 20 years down the road if you had just added to it right now when stocks are cheap, especially if we relate it to what happened in 2008 versus leading up to the 12 years after that, what happened in 2020 when it more than quadrupled the S&P 500 since that time. Now, this may be a little bit more dicey for those of you who are planning on retiring sometime soon, maybe within the next year or two. If you can swing it, I would suggest perhaps maybe pushing that off another year or two, or maybe 3, just because the stock market will recover. Like I said, I think it's going to happen sooner rather than later, and I think it will happen at a much faster rate than it did back in 2008. So for those of you folks that are out there that are planning on retiring soon, hopefully that you were able to talk with your HR representative or your portfolio manager that was able to put you in something that was a little bit safer. But at the end of the day, I would still give that same advice to you. If you have not maxed out your contributions to your 401k, now's the time to do it, especially if you're going to be retiring soon, because you could bring back your 401k to the levels that you were happy with and then some income in a very short period of time if you're able to do so. So that's going to be it for me and my 2 cents on whether or not you should sell out of your 401k. Obviously, I think it's a bad idea. It never really works out in the end. And really, ultimately, if you're going to be selling out of your 401k at this point in time, you are solely making an emotional decision. So that's why I said just take a step back and really think about what you're doing and why you really want to sell this right now. But more importantly, I want to hear from you now. Leave me some comments down below. I reply to all of the comments, and I would love to hear your thoughts on this. I would like to hear your thoughts on somebody who actually is contemplating selling their 401k and why. Also, if you agree with me, I would still love to hear from you, as well as you could potentially provide some words of wisdom to those people who may be reacting out of fear and are concerned about what might happen to their retirement in the coming days. Either way, guys, I would love to hear from you, and if you got value out of this video, please give me a thumbs up. I certainly would appreciate it. Also, if you're interested in learning more about investing and trading in the stock market, I would encourage you to check out the links down in the description below, as I do a live stream every single day before the market opens and kind of explain my plan, what I'm looking at within the stock market every single day, and then I'm with everybody throughout the trading day via a private Discord chat. And I would love to have you guys there if you want to learn more about this stuff. So that's going to do it for me, guys. Thank you so much for tuning in, and as always, I will see you all before the bell, and B Smith is out. So did Elon really lie to us, or was it just a matter of the situation that occurred after those earnings reports came out? Well, if you look at when Elon made that announcement that he